Hey everybody, welcome back to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, and how to make money work hard for you. Check out my other videos. If you like what I'm doing, please consider subscribing. Give a thumbs up. It really helps out the channel. All right, today we're going to talk about the overall stock market, what's going on in recent days, early March 2020. Obviously, the stock market is extremely volatile these days because of the whole situation going on in early March of 2020. The whole situation has been going on in China since the end of December, and now it's happening in the USA. Kind of took hold at the end of February, and now really disrupting our lives in the beginning of March. Basically, a lot of schools are shut down, a lot of cities are shut down, businesses are shutting down. So needless to say, the whole stock market is interrupted, and these are extremely volatile times. But you know, volatile times and times like this, where we have dipped into a bear market and probably a recession coming down the line, probably the end of this year. So these are the best times to be invested in the stock market. So essentially, the stock market is on sale. Everything is at reduced prices from their all-time highs. Pretty much every single stock that we're going to talk about today is close to their all-time lows, are close to their 52-week lows, or are even below their 52-week lows. So right now on the screen, you're going to see the biggest daily point losses of the Dow. You see number 1, number 2, number 3, and number 4 all happened in the last 2 weeks. The biggest 1-point drop ever in the history of the Dow, nearly 3,000 points, occurred just a few days ago, March 6, 2020. So needless to say, this is unprecedented. This is going to go down in the history books. We're going to look back 5, 10 years from now, and we're going to recall this. We're going to recall this moment in history, basically what's going on right now. Nothing like this has ever happened, probably dating back to 1918. So if you look at the charts I showed you before, from 2008, 2009, the stock market has gained roughly 400% in that time since 2009. So we've been essentially in a bull market for roughly 10, 11 years. So now we are officially in a bear market, and a lot of people saying that this was overdue. There's not usually such a long run of a bull market. So this is a big correction that was needed. And so it brought a lot of prices down to more reasonable prices and even bargain prices compared to what they were just 1 month ago. So I understand there's a lot of fear going around. If you turn on the news, it's basically like the world is ending. But I assure you, the world is not ending. This has happened multiple times. There's been multiple corrections, and there's no reason to believe that right now is going to be any different. If you look at the charts, if you stuck your money in 2008, 2009, and just left it alone and didn't touch it one time, you would have gained 400+% on that money. So don't let your emotions take control. Don't let fear take control. If you're going to invest, do some research, look into these companies, because a lot of good companies are on sale. And these big name companies are not going to go anywhere. They're going to be able to survive a recession. And so we're going to get into them right now. These are 10 companies that is worth it for a beginner to look into and worth it for a beginner to probably invest in. Number 1 is Apple. They're the most valued company in the world, over a $1 trillion market cap. So here's the income statement for Apple. You'll see in 2019, last year, they did $260 billion in total revenue. I mean, that number is just insane. Out of that, their net income was $55 billion. So the next screen you're going to see is their balance sheet. Balance sheet is basically how much money, how much assets they have compared to how much debt they have. So a big corporation like this, they're going to have tons of assets. They're also going to have tons of debt. So we want to see just how much asset they have compared to their debt. So the higher the debt, the more unlikely they're able to get out of hard times during a financial crisis like now. So in 2019, they had $48 billion in cash and cash equivalents. Total current assets, 163 roughly, $163 billion in current assets. If you calculate in long-term assets, they're going to have a total of $338 billion in total assets. Now, next screen is showing their liabilities. So basically their debt. They have short-term debt, which is total current liabilities of $105 billion, and long-term liabilities of $142 billion, for a total of $248 billion in total liabilities. That is an incredible balance sheet, and that's why Apple is Apple, and that's why they're a $1 trillion company. So here's Apple's chart. It's $244 currently. It is actually down 20% in the last month. So essentially that's like 20% off. That's like going to the store and all of a sudden you saw an iPhone or iPad or whatever was just marked down 20%. Would you consider buying it if it was 20% off and essentially it's on sale? So if you do, it's the same exact thing. the company, the whole company, Apple, is marked down to 20%. So when you're buying stocks, you're not just buying a piece of paper, you're not just buying a number on your computer, you're actually buying a portion of this company. So you're buying all of the company, you have a little fraction of every single part of this company. And the company does well, you're going to do well. So you would just ask yourself, do you think in the next 3 to 5 years, Apple is going to go back to the numbers that they were doing, given that the situation calms down, factories keep open up, and people are going to continue to buy phones, people are going to continue to subscribe to Apple services. So it's obvious that they're going to recover from this. They're not going to go bankrupt. They're not going to go anywhere. They're a $1 trillion company. So essentially it's on sale for 20% off. That is the reason why Apple's the number one pick. It is the strongest company of them all. It is on sale for 20% off. And 20% is nothing compared to other stocks that I'm going to show you. Apple has held strongly. They had to close down stores and factories all over Asia. They're going to see a decrease in their numbers. They might not even produce as much iPhones that they expected to. But even after all that, they're only down 20% for the month. And actually, they are still up 35% for a 1-year period. So next one, Amazon. Obviously, you probably shop at Amazon. Who doesn't shop at Amazon nowadays? So Amazon is a monster. It is a beast. It is doing $280 billion in total revenue for a net income of $11 billion. Here's their balance sheet. Their total cash is $55 billion. Their total current assets is $96 billion. And their total assets is $225 billion. Here are their liabilities. Total current liabilities are $87 billion and total liabilities is $163 billion. And so again, a pretty healthy balance sheet as you expect from a company like Amazon. So here's Amazon's chart, and you can see they have actually fared pretty well with this whole situation that's going on. For the 1 month period, they're only down 16%. For a 1 year period, they're actually still up 2.61%. All right, number 3 is Google. Everyone knows Google. Google is a monster. You're watching this on YouTube right now, and that is obviously Google owned. So Google is raking in $161 billion in total revenue, net income of $34 billion. They have $119 billion in cash and cash equivalents. They have $119 billion in total cash, total current assets of $152 billion, and total assets of $275 billion. Their debt, they have $45 billion in current debt, and they have a total of $74 billion in total debt. So Google probably has the best balance sheet in the whole world of any company out there. So if you do the math on that, Google has roughly $200 billion in assets after they paid off all their debt. They have $200 billion that they could just do anything that they want with it. They could pay off all debt, everything, they'll be clean, and they still have $200 billion that they can spend freely. A company like that is super strong, especially in an economy that we're in right now. They're going to be able to buy top companies that aren't going to be able to survive. They're going to be able to buy them out. Here is Google's chart. They're actually down 26% for a 1 month period. So again, just ask yourself, in 5 years, do you think Google is going to be bigger than they are now? Or are they going to be smaller? Are they going to go bankrupt? I don't think so, not with over $200 billion in cash. Next one is Facebook. Everyone should know Facebook. They're probably the largest social media company in the world. Obviously, they own Facebook, WhatsApp, their acquisition of Instagram. They are a monster, and they make tons of money doing ads on their platform. So their total revenue last year was $70 billion. Net income of $18 billion. Balance sheet has $19 billion in cash and cash equivalents. Total cash of $54 billion. A total current assets of $66 billion, complete total assets of $133 billion. Their liabilities, current liabilities of $15 billion, and total liabilities of $32 billion. So again, another strong balance sheet from Facebook. Here's their chart. Their stock is trading for $143, which is a bargain. Anytime Facebook is under $200, it's a bargain, let alone under $150. So in the 1 month period, they've been down 31%. Next one is Visa. So everyone should know Visa again. So Visa, if you have a credit card, most likely you have a Visa credit card. If not, it's probably a MasterCard. Every time you swipe your credit card, Visa gets a little fraction of that transaction. And all those transactions multiplied by hundreds of billions of transactions a year throughout the whole world, Visa is making billions and billions of dollars. Their balance sheet shows that they made $22 billion total revenue last year for a net income of $12 billion. Their balance sheet shows total cash of $12 billion, total current assets of $20 billion, and total complete assets of $75 billion. Their total liability is $37 billion. And so here is their chart. They're trading for $152. If you pull up any chart of Visa, you will see that Visa rarely takes a dip. It has to take a huge pandemic like this for Visa to ever drop in their stock price. Just pull up a chart. It shows Visa always going up and to the right. Very, very rarely does it take a dip like this. Next one is Disney. Everyone knows Disney again. So Disney, I have a whole video about Disney and why I think Disney is a good company to get into at these prices. I'll link that video below in the description. Check it out. But I'm going to go real quick about Disney. Disney total revenue last year was $69 billion. Net income was $11 billion. Their balance sheet shows total cash of $5 billion, total current assets of $28 billion, and total total assets of $193 billion. Their current liabilities is $31 billion, and total liabilities is $100 billion. Here's the chart of Disney. They're trading at roughly $91. That is 32%, 32.78% down in a 1 month period. Next one is Nvidia. I also have a video about Nvidia and my thesis on Nvidia. I'll link that video below. Check it out. But real quick, Nvidia is basically a chip manufacturer. They manufacture the best graphics processors. And they're also doing autonomous driving. They're probably the number 2 player in autonomous driving as far as the computer chip goes. Total revenue for Nvidia last year roughly $11 billion. Net income of $2.7 billion. Their balance sheet. Total cash of $10 billion, total current assets of $13.6 billion, and total complete assets of $17.3 billion. Their liabilities, a total current liability of $1.7 billion, and total current liabilities of $5 billion. Here's Nvidia's chart. They're trading for $211 currently. It was down to less than $200. Nvidia under $200, it's a steal. I've been buying it at $200 and I bought some for $190. So Nvidia has dropped 26% in a 1 month period, but overall for a 1 year period, they are still up 23.6%. Next one is Carnival. So these are getting more and more risky. So Carnival, I did a whole video on Carnival. I'll also link that video down in the description below. My whole thoughts about Carnival. They are the biggest player in the cruise industry. They have a good balance sheet. They have plenty of cash as compared to other cruise companies. And right now, they're basically completely shut down. I don't think they're allowed to do any cruises. So they are bleeding money. Everyone is bleeding money. Norwegian Cruise Lines, Carnival Cruise Lines, and Royal Caribbean, they're all in for a ton of pain right now. And their stock price reflects that. So Carnival did a revenue of last year of $20 billion from $18 billion the year before. Their net income was $2.9 billion. Their cash is $500 million in cash, 518 million. Total current assets of $2 billion. Total assets of $45 billion. And their total liabilities is $19 billion. So when you look at Carnival, you got to really compare it to their competitors. They only had $500 million in cash compared to all those other companies that I was talking about earlier. That $500 million is not that much cash, but compared to other players in their market, they have the most cash on hand. So Carnival has $518 million in cash compared to $243 million at Royal Caribbean and $252 million at Norwegian. So if I was to pick one company to weather this storm that has enough cash to kind of hold them over, definitely be Carnival. So here's their stock price trading at $12.30, which is incredible. I mean, basically it's trading like this company is going to go bankrupt. I was buying this stock at the 40s. I was buying at the 30s. It dropped to 20s. I was buying at the 20s. Now it's dropped to $12. I think my average cost basis is roughly in the low 30s. And I'm pretty much set on Carnival. I don't think I'm going to put more money into it just because I already have so much money into it. So they are down 70% on the month. Incredible. Down 77% for the year. Next one is Boeing. So Boeing stock has been beaten to a pulp. They had the whole issue with the 737 MAX being grounded and still currently grounded. So obviously with this whole situation, airlines are not flying. They're canceling their orders. So obviously Boeing is taking a huge beating and their stock is showing it. So here's their income statement. Last year they made $76 billion, which is a huge decrease from the year before at $101 billion. And that is completely contributed to the 737 MAX being grounded. Their net income was negative $636 billion. Their total cash on hand is $9.4 billion. Total current assets of $102 billion. Total assets of $133 billion. Their total current liabilities $97 billion, and their total liabilities of $141 billion. So definitely their balance sheet looks like they are in trouble, and obviously they are. But the reason why I think this is a good buy is just because look at their stock price, down to $112. That's down to 63% on the month. 66% on the year. So the fact that they only have one major competitor makes them a really strong and company that's going to stick around, especially in the airline industry. You know, the company is going to get bailed out if they need to. They are in good with the government. They also have contracts with the government for the military side of their business. So if they do need a bailout, you know they're going to get the bailout from the government. And the last one, number 10, the riskiest of this list. And the only reason I say it's risky is because this list is for beginners. If a beginner was going to get into the market and buy stocks, this one will be the most riskiest, only because it fluctuates so much. For a beginner, to see a stock, if you buy it and it drops 20%, 15%, that is pretty devastating. And if it goes up 20%, you're going to be like, oh my God, that's incredible. But this stock is going up and down like crazy. It was at 900s and now it is down to the 400s. And that is no other than Tesla. So their total revenue last year was $24 billion. And for this one, you got to look at their previous. In 2016, they only had $7 billion in total revenue. $11 billion after that, and $21 billion in 2018, now up to $24 billion in 2019. Their net income was negative $862 billion, actually down a little bit from last year, negative $976 billion. So they are a company that is not profitable right now. And that is also the other reason why I put it at number 10. It is not a profitable company as far as a year basis. I believe they have been profitable in 2 out of the last 6 quarters. They were profitable, but for a full year, they have yet to be profitable. However, their balance sheet is pretty strong. They have $6.2 billion in cash. And actually, these numbers are not updated because they just raised about $2 billion. I believe it was probably 3 weeks ago. So they're roughly $8 billion in total cash, actually. So their current total assets is $12 billion. Again, that should be roughly $14 billion. Their total current assets, their total assets is $34 billion, and their total current liabilities is $10 billion, and total liabilities of $26 billion. And here's their stock chart. They're trading at $408 as of current. That is just a bargain. This stock was up to $900+ roughly just a month ago. For a 1 month period, they're down 49%, roughly 50%. But for a 1 year period, they're still up 60%. So if you know me, I'm a Tesla bull. I have other videos that I'll link down below where I talk about Tesla and why they're going to be the car and the manufacturer of the future. They're definitely going to be number 1 to self-driving. So if you're interested more about Tesla and why I think they're going to be a super successful company, I'll link the video below in the description. Check it out. All right, guys, that's it for today. Thank you for watching. If you found any value in my videos, please give a thumbs up. It really helps out the channel. Consider subscribing. I talk about money, finance, how to make money work hard for you, how to grow your money, and how to invest your money. I'll catch you in the next one. Peace.